Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. France's political parties clash on everything from tax to immigration in a TV debate 4 days ahead of the election's first round of voting. ECB Governing Council member Olli Rehn tells us investor expectations for 2 more rate cuts this year are fair, as he remains optimistic about the economy. We'll bring you our exclusive interview.
The big picture is that, and our projection is that the European economy is heading for a gradual recovery this year.
Plus, Rivian's shares soar post-market as Volkswagen says it will invest $5 billion in a joint venture with the EV maker. We will get details.
In the meantime, a quick check on these markets here. Green on the screen when you look at the futures action. Eurostoxx 50 futures higher by 0.7%. The FTSE 100 also in the green, slightly underperforming. A lot of the action in the currency space, though. Flat on cable, 126.87. Slight weakness in euro dollar, 107.05. Markets today starts right now.
Wednesday morning, good morning. If you watched the French political debate last night, you made the right decision. The England game was really boring. We now move on to the other debates. You've got the UK debate and the US debate. But the French debate was certainly fiery. The question, guys, does it change anything? It kind of confirms a lot of what we already knew. It does, though. It felt like it did. Cemented the rally's position and its central kind of role in this election and how it potentially has the ability to form a government. It was interesting to hear them talking down Bardella, kind of making it sound like he was a reasonable and had a reasonable economic plan. And I wonder how the markets feel about that this morning.
Yeah, we'll see if there's any surprise in there. I was more surprised by the start of the programme this morning than I was about anything we heard in the French debate. But it was really interesting to see them in action. I mean, Jordan Bardella, yes, talking about migration. On the left, talking very much about retirement, reducing the retirement age, so taking on some of those themes we've heard from Macron that have been unpopular, and our Bloomberg colleagues describing how many in France, in the French political system, see that there is some toxicity to the Macron brand right now. And of course, Gabriel Attal defending the government, defending the reputation there. Interesting to see what French companies are doing as well, rushing to secure financing as they see a little bit of a calm window before we get into the 2 rounds of voting.
Yeah, the timing is everything. I thought it was interesting how Bardella was also really trying to make a point and reassure the economy, reassure the markets as well that there is actually an economic plan here. The big criticism here has been if the right comes to power, it's going to be a spending spree. It's going to create just absolute turmoil when it comes to the public finances and then the deficit just getting worse. He's actually explaining how the math works in terms of cutting back on EU contributions, raising taxes on the rich if you are making, I think, more than 4,000 euros a month, which is an interesting number to pick, I have to say. But also is closing some of the tax advantages for shipping firms as well. So there's a lot going on in terms of how to square the numbers.
OK, let's get more from Bloomberg's Caroline Conan, who's been standing by for us. I'm sure she watched the debate and not the, as guys described, boring England football game. Why would Caroline be interested in that? What are the key takeaways for you then, Caroline, when it comes to the French politics?
3 men, half an hour each, and constant clashes about the economy, about immigration as well, between Jordan Bardella from the National Rally, Manuel Bompard, who represented the far left for the first time, and Gabriel Attal, of course, the Prime Minister of Emmanuel Macron. The main topic for the beginning of the debate was cost of living. Bardella accusing Attal of having bankrupted the country, and then accusing the far left of wanting to create a Cuban economic model. Then you had Bompard from the left wing actually saying that the National Rally was giving up on most of their cost of living pledges, and instead they were the ones defending the cost of living by offering to block prices on essential products and raising the minimum wage to 1,600 euros a month. That measure alone would be a machine to destroy jobs. That's what Gabriel Attal responded to this. Of course, as you were mentioning, trying to defend Macron's legacy. One of the biggest clashes of the night was about the pension reform. As you know, Macron spent months last year trying to raise the retirement age, which he managed to do from 62 to 64, facing months of protests in the street. Bardella said that reform was useless. less inefficient. I want to go back to 62. Bompard said, I want to go back to 60 years old by 2027. How are you going to finance all this? Of course, everyone asked. Then Bompard said, well, I'm going to tax the rich, the 8% richest part of the French population, those earning more than 4,000 euros. Meanwhile, Bardella argued that there should be no income tax for the young people under 30 years old. Gabriel Attal responded, how do you justify that a factory worker who is 31 years old pays income tax while a trader who is 29 years old doesn't? So pretty intense debate. We're going to have a second one on Thursday.
A very intense debate and very differing views about how to fund that deficit. To your point about that pension reform, that was really a move more to kind of plug the hole in financing. Does this change anything when it comes to the polls?
Kriti, I actually wonder if this could potentially mean a slight boost to the left wing, because Manuel Bompard, many thought that wasn't a very good choice for this debate. But in fact, he did a pretty good job at trying to defend the program for the left wing, and he appeared calm and reasonable. Meanwhile, Gabriel Attal, the current Prime Minister of Emmanuel Macron, sometimes appeared a little arrogant, a little bit out of touch, which is, of course, something that the French do not like. And Jordan Bardella from the National Rally appeared very nervous, looking at his notes a lot during the debates. We'll see if this has an impact on the polls over the next few days. At the moment, the National Rally still has a clear lead with 35.4% in the first round.
Caroline, thank you very much indeed. We're going to talk to Lionel Laurent a little bit later on as well from Bloomberg Opinion, talking about the idea in his piece this morning on the Bloomberg that maybe actually the rally could get a big majority, and that could be the surprise that comes out of this second round of voting that we get in a week or so's time. Let's talk a little bit about the other debates as well. We're going to get the UK debate, then we're going to get the US debate. We'll cover that a little bit later on in the programme as well. The other story I really want to focus on this morning, though, is what is happening with VW this morning. VW buying this stake in Rivian, which I find amazing. It just proves how difficult it is to build EV software and how much VW is really struggling with it.
Yeah, and you think about what both of these companies get out of this. Rivian gets cash, VW gets access to some of that technology that you talk about there. And it's really interesting how this ties into a much broader theme, doesn't it? We've seen this from a number of car makers within Europe, but also over in the United States. Ford cutting spending on EVs, delaying new models and new factories. GM saying it's going to take decades for the EV market to really develop. And I think that's a really interesting perspective, actually, and one that maybe is lost in the quarter after quarter sales numbers and targets that we look for here. This is a massive shift within this industry, and maybe everybody needs to shift their mindset as to how long it takes to get there.
I thought it was interesting that that Volkswagen actually picked Rivian and Rivian picked Volkswagen, because this is a partnership that's been in the making for a while, and that Rivian's been trying to find various people or various players to actually partner with. Mercedes-Benz was on the list, Ford, an early investor as well, in addition to already having a 16% stake owned by none other than Amazon. That's their EV kind of investment that Amazon is getting as well. The number that was staggering for me is at $39,000 of a loss for each vehicle built last quarter.
By Rivian, yes. Yeah. I wrote down exactly the same number, Kriti.
It's enormous.
My number of the day.
How much does a Rivian car go for?
I don't know.
More than that, I hope.
I thought you just know that off the top of your head.
I suspect they are really struggling. I come at it from the Volkswagen side. I think that's where the real interest lies here. Rivian was struggling. It may have gone bust. We've seen Fiskars going bust recently. These are companies that are really sort of having a big problem. But the EV transition from the transition from ICE to EV is where the challenge really lies. And clearly, Volkswagen has struggled on its software. And that's what they're buying here. They're not buying a car company. They're buying a software company. That's where the value lies in this business. They don't care about the cars. They care about the software and the ability of all these components to talk to each other.
Yeah.
And that's where they failed.
And it tells
not done well.
Tells you what cars are these days.
Exactly.
I remember a decade or so ago, car bosses saying it's going to be like a mobile phone on wheels, and everyone's sort of sniggering at the sales pitch. But, there's enough technology. There are enough chips in there now to justify that line, perhaps.
Absolutely. The chips are one thing, and we've learned how important they are. But the software is where Volkswagen's tried to build this silo, and it's really held everything back. Its inability to make that silo work quickly enough to deliver the cars it needs, particularly for China, massive problem.
You talked about the chips. You talked about the technology. Can I just add lithium as well? Not that we're going to dwell too much on this, but I read a really interesting story yesterday that Albemarle, one of the main players in lithium manufacturing, which is a key ingredient in battery production, is basically slowing down on their investment, and they were really expanding in a big way because of this EV push. And now that you see these EV kind of dynamic rolled back globally, it's rippling out throughout the supply chain down to the point that's affecting even Chile's economy, which is, of course, a major manufacturer of lithium. That's your fun fact on minerals for the day.
Excellent. We're doing chemistry here as
Join the dots. We'll join those dots. Let's talk about markets. I mean, not because the moves in markets right this moment are particularly exciting. It is a bit of a sort of holding pattern day. Yeah. But there's all kinds of undercurrents of hawkishness coming through for me this morning, supporting that sort of higher for longer narrative, which we were discussing for a long time.
Anna's firmly down under. Her mind is down under this morning.
I am a little bit this morning. We had an inflation print with a 4 handle. That was from the Australians. It was supposed to, the estimate was 3.8%. We got 4%, described as a bombshell by IG Markets. And there's talks of hikes again.
Exactly.
Over in Australia. And so, just another reminder of just because you pause for a very long time doesn't necessarily tell you about the next path of action. And even from Bowman at the Fed saying that raising the bar in terms of interest rate cuts. Now, of course, that Bowman, we know is pretty hawkish, but still interesting to get those hawkish lines. And even Lisa Cook saying cutting rates, it's likely at some point, which doesn't feel like a hugely bold statement.
Ollie Rehn out of the ECB, 2 cuts, no worries.
Yes.
I wonder how far you can stretch it, how far the ECB can go. We come back to this debate about kind of the fact that they are all connected.
Yeah.
If the Australians are doing kind of hiking again, you've got the Fed on hold, how far can the ECB really push it?
The trade between Australia and Helsinki, we don't discuss much.
No.
We should.
that does, the currency pair doesn't necessarily cross our minds, but the euro-dollar absolutely does. If you see this divergence, even between Australia and the States, for example, if the States are talking about staying pat for a little bit, Australia talking about hikes, that's not showing up in the FX market. And I think the overlying theme here, and whether it's the stock market, the bond market, the FX market, is nobody quite knows what to do, so no one's doing anything. And it kind of feels like it's a very complacent market, which is why you might see the futures kind of on autopilot a little bit in the stock market. See bond markets, even the commodity markets, trading in a little bit of a range, and we're just kind of waiting for that next catalyst, either to the upside or the downside.
Feels like a hump day in many senses. We did get FedEx numbers, though. They caught my eye. And that stock really rallied on the back of those, up 14%. That can have some read across. Although there wasn't a huge amount of read across into other sort of rivals, because it didn't seem to be so much a demand story, more about what they're managing to do. So cutting costs, buybacks.
It's a cost-cutting and integration story.
Yeah. This is and they're talking about pulling out of their freight business, spinning out their freight business, which UPS just did, by the way, with RXO. So there's a really interesting restructuring theme that's going on the logistics.
There's a bit of logistics as a leading indicator, though. So keen to watch that.
Is this a leading indicator, or is this just an idiosyncratic single stock story? The question we asked yesterday was, do you buy NVIDIA?
Yes.
The answer is yes.
It was yesterday. Shall we ask it again?
So we'll ask that question again. Iceman thinks that it's a blip and that wasn't a fundamental sell-off, and you can kind of see the reasoning behind that. But I guess the question is asked again, maybe in a slightly different way. Do you have to have NVIDIA in your portfolio? How critical is that? And if you don't have it, are you going to underperform when it was yesterday an opportunity to get back in? And maybe for those that haven't, to get some more exposure to that stock. It just continues to play this central role in everything. We've spent a lot of time talking about what happens with the Fed so far this year. The narrative is firmly on what is happening with NVIDIA day to day. I
mean, you mentioned whether NVIDIA should be a part of your portfolio. Those comments coming at the Bloomberg Invest Summit, by the way, in New York for our global audience. At the same summit, they're talking about how excited they are about private capital and why it's a must-be in your portfolio. We're going to discuss that later in the show, but I thought it's interesting in terms of you're having the same conversation about how you actually invest, what you actually want exposure to, when right now NVIDIA and private capital are two of the highest yielding parts of any market.
And two particular areas that are really hard to value and really hard to understand and are very murky, and we don't really understand where either are going at the moment.
OK, let's talk about something. We've mentioned a few of the things that are coming up in the programme this morning. Also coming up, the CEO of Barclays says banks can't go, quote, cold turkey on the oil and gas industry. We'll get more from our interview with him at the Bloomberg Sustainable Finance Forum that took place earlier this week. Plus, UK Labour leader Keir Starmer says his party would target economic growth of at least 2.5% if it won the election. We'll look ahead to the election debate later today. If you have any questions for our guests, please get in touch. IB plus BBTV Go is the number to use as the sun comes up over London. This is Bloomberg.
In case we see the disinflationary process continuing and moving towards our symmetric 2% target over the medium term, then it is reasonable to assume that we stay with this direction and continue rate cuts. Having said that, I don't take any stand on when and how much. We are not pre-committing ourselves to any particular rate path.
ECB Governing Council member Olli Rehn speaking to Bloomberg exclusively. Interesting that he says he's not committing to a rate path, but he thinks a couple of rate cuts might be reasonable. And given what else is happening in the rest of the world, I find that conviction in some ways interesting. He's saying he doesn't have conviction, but he sort of does have conviction. Pooja Kumra, Senior European and UK Rate Strategist at TD Securities, joins us now. How much conviction do you think the ECB should really have?
Well, they clearly don't want to pre-commit, which they seem to actually did in the June meeting. I think one thing that I thought that from the press conference from the June meeting was very interesting was Lagarde was very confident about the kind of projections they have. And that's true. I think ECB has done well the way they have given all the projections. It's worked in their favor. And they're still looking at inflation below 2% by 2026. So I think at this stage, yes, the growth rebound has bought them time, but they still want to cut rates just because our growth is still under 1% right now, right? We are not US that's actually growing at 2.5%. So I think they don't want to push it that much. They know we're not a structurally strong economy yet. The supply-demand imbalance that we have, we do not have a strong demand here. But we also know that the kind of wage inflation we are seeing globally, that the path to lower inflation below, and that's pretty much visible by today's Australia numbers that we were discussing just now.
How do I separate out in Europe the ECB and what is happening with the data and the narrative that we are getting from the Governing Council members and what's happening with the politics? French politics. You've got politics developing in Germany that's looking quite interesting as well. What's happening this week in terms of who's going to get the key jobs at the European Commission and what that tells us about what this Commission is going to do next. How do I figure out what to do with European bonds, what to do with European government bonds, when I've got the ECB on one hand and the data on the other, and then the politics on the other? Which is the most dominant factor right now, and which do you think will become the more dominant factor?
I think data for sure. I think we have been more reactive to data.
Okay.
When it comes to politics, yes, I think the French snap election was something we were not used to since 2011, right? Yeah. That's why we snapped back so quickly. But I think there is still some trust that at this stage, at least when it comes to the European politics, they will be a bit more sensible when it comes to fiscal. Like, we all have gone through the trust moment, and I think we take that as an example that we do not...
Has Meloni saved the European bond markets? I put my hand in front of your camera, which is a big mistake.
Please.
Has Meloni saved Europe from a bond market perspective? Because she is seen as the right-wing but credible story.
Definitely. She was definitely a big game changer, how we defined right in Europe. But I think for me, what changed how we thought about spreads in Europe is ECB's PEP plan. They have told you that they can buy anything and everything and use their flexibility, right? To some extent, we do still have PEP reinvestments going on. And we know that if this chaos from the French spreads actually spreads across board, ECB still has those PEP reinvestment to actually reduce the fragmentation. So if you see, even in this hiking path that ECB embarked from 2022, spreads have been so stable just because markets know that there is this tool that if something goes wrong, that ECB is there. But again, full credit to all the peripherals that have been actually following the rules. They're actually getting upgraded by all S&P agencies. Other than France, I think everyone has got upgraded when it comes to ratings.
We love to talk a little Spain and Italy on the show. Talk to us about this. You talk about the fragmentation, which of course would be a giant red flag if the ECB does ultimately tap those funds. But then, in terms of the deficit risk that Guy was just speaking about, do you take duration risk then in response to that, or do you wait for that to is there a longer time frame for that to play out?
So again, yes, when it comes to France, the deficits are pretty much ugly. You can see it on the face, and it's not going to improve anytime soon, right? Even if we have a cohabitation government, it's not going down. Yeah. I think what markets have done, they have just adjusted to the new yields. If they see some calm in politics, ultimately everyone wants a yield. So I don't expect people not jumping into OATs. Yeah. But we need that kind of calm. And unfortunately, that calm will not come on Monday when markets open. We all know that we will be juggling to understand which parties will actually form the government. Yeah. So we will need to wait for a week. But I think at least spreads should not be as elevated as 80 basis points we are trading. I mean, I would expect them to go back to 60, but let's not say that they are going back to 30, 40. That's not something that we are looking at.
And let me ask you about the broader inflation picture here then, because we started the programme talking about, French politics, but then talking about various market themes, including some fairly hawkish-sounding prints on inflation out of Australia, numbers coming in with a 4% handle. Does this act, and we often seem to talk about Australia, sometimes that's where the signal seems to come from, a warning that rates don't always move in a straight line, that you can't just have fairly linear expectations about rate cuts from here. Do we read anything across from Australia into a sort of broader global inflation theme?
No, certainly. I think everyone, we can see that we have started the day with slight bearish reaction. And I think everyone knows that no one is having a smooth path, right? It's something similar to what we saw in Q1 when it comes to US CPI. We got stronger numbers each and every time, and suddenly they've started to slow down. So we all know that it's going to be a bumpy road. And we also know we are trading a market that's not going to be liquid anytime soon in the next 2 months. So I think any reactions will be overreactions. I mean, if you see, all the central banks right now are projecting that they will come to the 2% inflation at some point, but that point is clearly not going to be a clear path, and which is not good to trade.
Yes. I mean, when you say there won't be much volume for the next 2, this is just seasonal, normal, rather than the politics, is it? Because we saw an interesting story as well that corporates are actually French corporates coming out to raise debt right now because they fear that maybe the market might get a little bit difficult. So I suppose we've got the normal summer lull, but then we've got plenty of politics to play out.
Exactly. And the timing of election is June 30th, which happens to be month end, quarter end. And we have the PCE number also coming on Friday. So I think there's lots of risk. Friday will be a fun show.
Yeah.
Do you trade the debate? Do you trade the U.S. debate at all?
I don't think we'll get that much from it right now. But given the fact that there's no news until the PCE, I think markets will read more into the U.S. debate. But I think it's just started. Something that we were also discussing, that markets have still not started looking at what U.S. election results actually mean for term premium, for fiscal. I think right now we are also thinking about the CPI numbers and where it takes Fed or ECB when it comes to rate cuts. I think the Q4 story may be very different for rates when we are talking about more fiscal coming in from everywhere.
All right. Pooja Kumar, we have to leave it there. Senior European and UK rate strategist over at TD Securities. We thank you so much. She was there talking about the U.S. debate, but there's plenty of other debates as well. We've got talked about France. I think we've got more on the UK, of course, coming up as well.
Yeah, absolutely. We hosted a business debate just a couple of days ago, and tonight we see the two leaders going head-to-head. Once again, only the second time, actually, since, apart from Prime Minister's questions, where it happens weekly, but the only second time in this sort of format.
Starmer's got an ITV interview coming out today that I think he talks about 2.5% growth in.
Yeah, they go back to the last Labour government and they say, we used to achieve that kind of level. That's what we're going to be aiming for.
Where is 2.5% growth going to come from?
A bit of house building? Plus?
A lot of house building if you're going to generate 2.5% growth. You're going to have a Labour inflation issue if you try and do that. It's going to be interesting. I'm genuinely fascinated to see what he has to say.
Yeah, there's a lot to follow in the political space on both sides of the Atlantic. Coming up, we're going to be diving a little bit more into the French story. Our big take on the 40-year career of LVMH CEO Bernard Arnault. That conversation next, what the meaning of some of this French turmoil is on the luxury brand, plus maybe how LVMH moves forward in their strategy. More on that next. This is Bloomberg.
Welcome back to Markets Today. 30 minutes until the start of equities trade here in Europe. The futures story is a positive one. It seems, Nvidia recovered yesterday in the States, and maybe we have a little more of that enthusiasm to price in, plus some other corporate stories that we've been discussing this morning. Euro Stoxx 50 futures then up by 0.7%. US futures also higher, not by quite so much. Nasdaq futures up 0.2, E-minis up 0.1%. So lots to talk about. European stocks then set to rise. The focus on inflation out of Australia and Canada, comments from the Fed. All of that much discussed this morning. Let's get more on the luxury sector this morning. For more than 40 years, Bernard Arnault has built the world's largest luxury conglomerate as chairman and chief executive of LVMH. The remarkable story is the subject of Bloomberg's Big Take. And let's get more on it from one of the authors, Bloomberg's Angelina Rascouet, who joins us now from Paris. Angelina, good morning. So you spoke with Bernard Arnault for this piece. It's pretty rare to get him to agree to an interview, to open up in an interview. How was that achieved?
Yes, indeed, Anna. Hello. He doesn't really like talking to the press. It's not one of his favorite activities. It took a lot of months of convincing. We really wanted him to feature on the cover of the new version of Business Week, and we were persistent with LVMH. So just so you get a sense, last time we did an interview with him was about 10 years ago for the opening of his museum, the Fondation Louis Vuitton. So the day we did it, he granted us about 50 minutes. So in the morning, he had just awarded a innovation prize at Vivatech. Then we met him around midday at the LVMH headquarters, and he was affable. And then, in typical fashion of a very busy man, right after we met him, he flew to Barcelona for the Louis Vuitton cruise show. So yeah, packed day for him.
So what was the big take, Angelina? What was the takeaway from your conversation with him?
I mean, basically, our story is based on the interview with Bernard Arnault, but also on discussions we've had with a lot of people who have been in his orbit over the years. And really, we wanted to tell the story of a builder, the builder of a luxury empire. And obviously, we asked him about the genesis of how it came about to him, the idea of LVMH, and he said that. Basically, he saw all these independent, atomized generally European family-owned luxury brands, and he figured that putting them together would probably reinforce them. As long as you kept, you let them be independent, craft their image in an independent way, craft their image and their products in an independent way, but you could provide them with economies of scale. So, for instance, finding them the best retail locations. Buying ad space, efficiencies when you buy ad space in bulk, and also providing them with great, either management or creative talent. That's very important. But we talked about many different topics. We went into China. We went into the whole question of his acquisition of Tiffany, but also on real estate acquisitions, and also his relationship with creative talent. This is a man who's naturally quite cold and distant, and when you're dealing with creative talent, you're dealing with people who are very sometimes eccentric, exuberant, and that whole relationship is very, very important for LVMH. If you think about, Louis Vuitton or Christian Dior. So so I really suggest our readers. Our viewers grab that latest issue.
We certainly will. And at the same time, as we're talking about this expansion of his empire, talk to us about his personal stake into Richemont. It looks like there's some reports around that. Why a personal stake as opposed to making that a part of the LVMH empire?
So during the interview, we asked him about M&A. Are you still on the hunt? And he said, yes, I'm still on the hunt, but I'm not going to tell you. But we know a lot of companies and of families who would be very happy to have us as their owners. But during the course of the reporting, we found out that he had been buying shares in Richemont. Richemont is the owner of Cartier, of Van Cleef & Arpels, jewelry brand, hard luxury. And LVMH, even though they have Bulgari, they have Tiffany, he's been dropping praises of whether it's Cartier or Van Cleef or of Johann Rupert, the controlling shareholder of Richemont, for the past few months, and we found that. So we found out that it's a small stake. it's a personal stake. It's not held via LVMH, and there's no intention to basically the goal is to have it as an investment.
All right, Angelina Rascouet, we thank you so much for bringing us that story. A fabulous big take. Everyone should check it out on the Bloomberg Terminal or, of course, on Bloomberg.com as well. But let's get a little bit more on the luxury space. Joining us now, Swetha Ramachandran, fund manager over at Artemis, and, of course, one of our frequent guests on the show. Swetha, lovely to see you this morning. Walk us through the kind of luxury story in the context of some of the French turmoil that we're seeing in the political space. What's the read-through? Connect the dots for us.
Yeah, I mean, I'd say actually very little in terms of direct implications from the French turmoil other than on sentiments, which is what we've seen the sector sort of been buffeted by in recent weeks. Exceptionally high volatility, something that we got used to sort of towards the end of last year as companies were messaging their top line numbers down. But that has now started to recur as the expectations are that the second quarter of the year will not be meaningfully better than the first quarter, and it will need to move to the second half of the year before we start to see kind of growth really start to improve from here. And then, of course, the French election overhang hasn't been great for the stocks. But if we look at the fundamentals of the companies, they're listed in France and they're incorporated in France, but they have relatively little exposure in the context to the French consumer. The vast majority of the sales they generate come from Asian as well as US consumers. So in that context, I think it has very little to do with the earnings of the companies than around sentiment towards them.
Would this then maybe be hit by things like corporate taxation, for example? If you do have that exposure to the American or Asian consumer, I'm curious what potential pitfalls down the road could be hit, because Swetha, as we heard these kind of turmoil talks, these political ramp up that we're seeing in France, LVMH and some of the big luxury names were indeed hit in the stock market. What are they responding to?
I guess in terms of tax policy outcomes, the only thing we know for sure is whatever the next government in France, the debt levels are going to be higher than they are today. That's pretty much a certain, regardless of the outcome of exactly who wins. So yes, higher taxation has been seen as one of the solutions. I mean, in the context of the pricing power that many of these companies have, I would argue that consumption-led taxes, if they are imposed, would probably be able to be passed through to the consumer. The corporate taxation level is an issue facing all French companies, not just luxury ones.
So you mentioned, Swetha, good morning. You mentioned that some of these businesses, they don't earn a lot of their money in France. They're global, and that really is global, not just exposed to the sort of increasingly aspirational Chinese consumer, but that is a part for some of these big fashion houses. So where are we on the Chinese consumption story?
So that's an interesting point. And when I say they don't generate revenues in France, I meant really with the French consumer, because they're generating significant revenues in France with traveling, with tourist consumption, which is, of course, one of the big stories of 2024 is that big resumption of Chinese outbound travel, which is weighing on spend in China, but is able to be at least partially offset by increasing spend by Chinese consumers outside of China. So, for example, Japan has been a huge beneficiary thanks to the weak yen, as well as the tax refundability status of purchases made in Japan. Asian consumers, Chinese consumers in particular, have been flocking to that market to stock up on luxury goods, among other things. That benefits some brands more than others. And of course, LVMH's brands, Louis Vuitton in particular, has had a significant presence in France for many decades now, unlike perhaps smaller brands that haven't built up that footprint there and so may not be benefiting from that diverted Chinese spend. I think the story of China will remain very much this two-half story where Chinese consumers outside of China continue to propel growth for the sector, but mainland China itself probably weak, partly to be expected because of the repatriation of spend and partly because of these well-flagged macro concerns that we're aware of.
And if Chinese consumers are in Paris this week, Swetha, they may take a detour into Paris Fashion Week, which I understand is taking place. Would they learn anything new about the fashion world? You flag that increasingly eccentric meeting point between sport and high fashion. Swetha, what do we learn on that front?
Yeah, I mean, it's surprising. It might come as a surprise how little analysts actually spend, analysts covering the equities spend on analyzing fashion weeks, because as you could probably imagine, we're not perhaps fashion experts. But it is interesting that in recent years, fashion has had to conquer new worlds in a sense. Sort of, they've conquered Hollywood, art, sport seems to be the natural next battleground. And we can see this. LVMH, as a flagship sponsor of the Paris Olympics, is clearly in the lead. Pharrell's fashion show kind of was a testament to the human athletic prowess, I think it was called. So there was a lot of kind of references to the summer of sport that's upon us from the luxury companies. And I think that goes back to something Mr. Arnault said last year at the annual earnings call, which is that LVMH, in his view, is not a fashion company. It's a cultural company. And, there's obviously an element of exaggeration perhaps in that the bulk of their revenues and their bread and butter comes from selling fashion. But that intersection of the worlds of fashion and how it becomes relevant to consumers in their daily world rather than being something rarefied is something that they need to do in order to widen their addressable market as they go forward. So I think this collaboration with sport and sportsmen, their recent ad campaign, of course, featuring Nadal and Federer on the heels of their very successful ad campaign with Messi and Ronaldo a year and a half ago, is all a further step in that direction.
Sweta, good morning, it's Guy. Just take me back to the Richemont story we were just discussing with Angelina. Is that just a private holding? I can never forget the Hermès story and how Arnault played that one. Is there any kind of maybe a similarity between those two stories? Should I be interested in him pursuing maybe this to more than just a personal stake?
I think both companies have made no secret of their admiration for the other. And that said, Mr. Rupert has also wanted to clarify that he intends for Richemont to remain an independent company. I mean, I'm sure, were there to be discussions, they would probably be friendly rather than hostile, which is what initially occurred with Hermès. As far as we know, there's been no buildup of a stake that's reportable, which a meaningful stake would have to be. And so I have no reason to believe that this is more than a personal stake for Mr. Arnault.
Sweta, LVMH trading 736 this morning. It's been as high as 900 recently. Good entry point?
Well, I think in the context of a company that's trading at sub 20 times FY25 earnings with the prospects of gentle earnings upgrades, not immediate. And I think that's the worry that people have, is that there's no real catalyst at the moment. But if we look at for sort of US household wealth and how with the strength in the equity markets that's at record highs now, there's a clear path in sight for a recovery of the U.S. consumer. And I think all eyes are on China to see what stimulus, what the third plenum in July could lead us in terms of any consumption stimulus or a recovery of animal spirits in that economy to really get the sector going again.
Sweta, always great to catch up. Perfect person to talk to. Thank you very much indeed. Sweta Ramachandra, fund manager at Artemis, on what's happening with the luxury sector. Big French theme running through the show this morning. I'm going to carry on that right now with some Atos news. 1 Point Consortium apparently has withdrawn from talks with this beleaguered French technology company, software company. Kretinsky's EPI, though, is proposing to restart talks. The saga continues. We'll get more details in our Stocks to Watch section coming up very soon. This is Bloomberg.
There's a big opportunity in credit.
There is huge investor demand.
Because the returns are higher, now everybody wants access to it and is trying to get into it at the same time.
The credit cycle is quite mature.
What we want to do is just be all things credit.
We do expect there to be some challenges ahead.
Private credit has been touted as this amazing thing, almost like NFTs or, ChatGPT.
I don't think that the boom in private credit all of a sudden suggests that private credit is bad asset class.
I think it would be impossible for us to ignore private markets and not think that there's a large opportunity set.
We don't think the very record tights that we have on credit spreads are reflective of some of the real challenges we have in the economic backdrop.
I look at it like this amazing force that will have hiccups in the years to come.
Some of the voices from the Bloomberg Invest Leaders event taking place in New York this week. Joining us now to talk all things markets in 2 minutes, our Markets Live executive editor, Mark Cudmore. Mark, good morning to you. We started the programme with some corporate news flow, a little bit of markets, but not clear exactly where direction's coming from right now. But one thing that was of interest, the Australian inflation print, reminding us once again, perhaps, of these things don't move in a straight line. Do we take anything globally away from that 4% print on inflation?
Yeah, I think it reinforces the idea that, inflation's not going to come back down to this old world, and probably the 10, 12 years that we got post-crisis was the anomaly, and we're going back to a slightly higher yield regime. What is that level of yields? It's hard to know right here. I was trying to work out, have Australian yields overreacted or not, given how much they've moved overnight. I think they're about fair. They're pricing in a 50% chance of a rate hike, and I think that's about fair. So there's not really an opportunity there, but I think this is a general theme that people who are betting on aggressive rate cuts, that can only work in a world of where we get a significant downturn in growth.
OK, and we'll have our views on whether that's likely. Let me ask you then, with that in mind, have we heard anything new from the Fed voices we had? I mean, Lisa Cook standing out for saying we'll get a cut in rates at some point, which doesn't sound very definitive at all. And then Bowman goes so far as to say, suggesting at least that the recent soft data hasn't changed the view there. I mean, anything new on the Fed debate?
I probably shouldn't say this, but I've just stopped reading any of these Fed comments at all. I don't think we've heard anything new since December. I think December was this kind of dovish reaction function. We are desperately looking to cut rates when we get given a chance. I don't think anything's changed since then. I basically, every morning, through every report, whether it's Bloomberg or anything else, you're going to get, these are all the Fed comments overnight. I just tune them out. My eyes glaze over at that point. I don't think we get anything new. They're data dependent. And the data at the moment does not justify rate cuts.
No, and we're going to get some PCE data, I think, the end of this week. Is that going to be a focus? Could that?
I mean, obviously, if that's a big shock, that could change things. Because some of it's been
soft recently, some of that inflation.
Exactly. And I do think there's a genuine disinflationary theme out there, and I think there's probably the downside chance there. And I guess, compared to a month ago, what's changed for me, rather than any of the Fed rhetoric, is I do think that some of that disinflation actually is coming back in. I thought we were going to go into a re-acceleration of inflation, and that's not coming through yet. So that's a slightly positive sign overall. But I think that, rate cuts aren't coming soon. I think we need this whole sequence of data prints before we change the narrative. OK, Mark, thank you very much. Bloomberg Markets Live Executive Editor Mark Cudmore with us this morning. Remember, you can get up-to-date information and analysis. MLIV Go is the function on the Bloomberg terminal. That's where we are on the global rate story then. Team, anything else standing out? I mean, Mark's not moved by the Fed. I like the idea of ignoring the Fed. That sounds absolutely fantastic. Well, yeah, depends if you believe that they are so data dependent. Well, OK, the market hasn't moved. The market hasn't moved for ages. The flat curve has been there. It's not steepening. Everybody thought it was going to steepen. It's not steepening. And how much longer does that continue for? And this whole debate about what's happening in the credit markets as well is really interesting as well. When do you do you stick with credits over govies? Despite I can't remember who was it Katie Koch on that piece saying that she thinks they're way too tight. Yeah. There's lots going on here that are really interesting, but at the moment, to your point, Kriti, everything's kind of stuck. And occasionally we get an anomaly in the Australian kind of data, but there's not much there. Anna's very excited about the Australians this morning. I'm looking for something. But that's the point, fair. Looking for something. Well, because everything else is in stasis. It is, and it pains me to say Mark Cudmore is right, but when you look at the yields, sitting next to you, I know, I said that on purpose. Wise. I have to. I'm under duress. But the yields, the 10-year here, 426, and it still hasn't cracked below. Even on the front end of the curve, you are still seeing it at 472. It has not moved below 470, and that is shocking if we're talking about cuts getting moved further out, or even Go ahead. No, it's kind of what's shocking in the bond market at the moment. It's amazing. I think the shock came earlier this year when we priced out all of those cuts. Nobody wants this yield. 472 is not juicy anymore. 5% well, everybody's got their money anymore. In the money markets. Well, and do you take that? That's the whole different. There's a good piece. I hate to kind of bring up the Journal. There's a good piece in the Journal this morning talking about this. So that's what's happening on the macro front. Let's talk a bit about what's happening on the single stock story. Joe Easton's got a lot to think about this morning. Joe, over to you.
Morning, guys. So a lot to get through, as you say. Firstly, we are looking at Volkswagen following that exciting news of a deal with Rivian over in the US, the US-listed electric vehicle company. Volkswagen investing $5 billion in the firm, an initial $1 billion and $4 billion later. It will give them access to Rivian's technology in EVs and also their software, which seems to be the key attraction for them. Here's the move in Rivian, up almost 50% in US trading yesterday, a massive gain for that stock. We'll wait to see where Volkswagen opens up this morning, but it has been a bit of an underperformer versus the broader Stocks Autos Index, which is this line at the top here. Now, potentially that's due to some of their weakness in EVs, particularly in China. So this might be a bit of positivity for that company. Then we're moving over to the delivery and postal sector. This is after FedEx soared last night. Earnings beating expectations by some way. They will be as much as $22 a share. Analysts are only looking for around $20 a share. Potentially a bit of a revival in some of the parcel units that have seen weakness. And there's the move in FedEx yesterday, up 14%. They are in the process of cutting jobs. And interestingly, yesterday, they did also announce they're reviewing their freight business. That could mean a bit of a read across for some of the freight firms in Europe and broadly the postal firms. Deutsche Post, PostNL, bpost, all having weak years. The only one that's really done well is the Royal Mail owner, which is, of course, a takeover situation. Then, in terms of another delivery space, Deliveroo, this one in the headlines because there's a report from Reuters saying the US company DoorDash looked at a takeover of the British company a few months ago. They backed away because they couldn't agree on valuation. But there's a good quote from Jefferies today saying that while the talks failed, such is the strength and industrial logic of a deal that we would not be surprised to see similar headlines re-emerging. So this story isn't over yet. Finally, we got that breaking news on Atos. One of their takeover and financial rescue packages has actually collapsed. This is the one from OnePoint. They've moved away from this deal, but another one is in the works. This is with EPIE, who are reiterating their interest to participate in the restructuring, according to the statement that I've got on my hand here. As we can see, it's a long-term sufferer over the past year, down 90%. They really need a deal to come on. Keep an eye on Atos in Paris today.
A long-term sufferer. No, nobody wants that title. Joe Easton, our equities reporter, doing very opposite of suffering there. We thank you so much for that update. Coming up ahead as the market open, we've got green on the screen when you look at the futures picture. Eurostoxx 50 futures higher by almost 1%, higher by, we'll call it 0.8%. The FTSE 100 right on there, on its back foot, right on its heels, I should say. I'm getting my metaphors mixed up. Higher by 0.4%. Across the board, you're seeing green on the screen. But how much of this is a story of autopilot? How much of this is a story of caution? Do we see those gains sustain into the market open? We're going to have full coverage for you in just a few minutes. Remember, we do have a lot of single stock stories. So in the absence of some sort of macro catalyst, we're going to see what the read-through looks like in some of the single names that Joe just pointed out. That conversation next. This is Bloomberg.
A couple of minutes ago until the start of equity trading here in Europe. Yesterday's session, massive snooze fest. Nothing's happening. Take a look at the chart. It basically goes sideways. So we're looking for a little activity this morning. Maybe we get that in the form of a bounce in technology stocks. Nvidia did well yesterday. It's going to be interesting to see how Volkswagen trades this morning as well with that software deal surrounding Rivian. Atos is going to be in focus. There's some single stock stories. Do we get a big enough catalyst, though, to move the market one way or the other? Because yesterday was a little unexciting.
Right, but
it
like
just, the football, Anna.
Yeah, exactly. The football just sort of topped it off. I did stay up for the first half.
Did you really? I didn't.
And then I thought better of it, given the early starts. Yesterday's, split of sectors in Europe kind of tells it all. Half of them went up and half of them went down. Yeah. And I don't know, we seem to be getting some leadership from Nvidia at the moment, and that's all leading these markets.
Which was supposed to be, isn't the conversation we had literally 24 hours ago on the set that this might be the catalyst that could snap some sort of correction? And the answer is no, it's not it. We're not there yet.
Not there yet.
Do you think there's an argument to be there?
You listen to people like Eisman, they're talking about the fact that this is just, he's got lots of it.
Yeah.
Still thinks that yesterday was a blip, the last 3 days was a blip, that actually the story is intact. And you can kind of understand that. There's no fundamental reason at the moment why it should go down.
As we discussed, there were sort of 5 technical reasons and other reasons, and none of them seem to be fundamental. You raised the good point. What happens if there is a good fundamental reason? And, it's dropped 10% on these sort of non-fundamentals. Let's see what happens. But it wasn't, therefore, there wasn't much read across into other stocks, which in itself was interesting.
So is there a catalyst today?
Maybe not today, but the devil's advocate story is that it's still a scale-up story, right? That it's still money's being put in. What happens when that slows down, which we've seen with like Apple, for example?
Absolutely. Airbus was interesting yesterday. I'll take you back to the plane spotting story. So we'll see how the markets open first thing this morning. We're anticipating that maybe you do get some sort of an effect coming through from Nvidia. It's interesting to see where the early losses are coming through. Bellway, Novo Nordisk. I need to put my glasses on to figure out what's happening here. Small laptop. And then...
We'll get you a magnifying glass.
you may need it.
Don't joke. Pass it round. Let's share.
Yeah, precisely. I will zoom in a little bit further. So, yeah, some of the UK house builders are actually softening up a little bit, which I think is interesting. I'll look for a note on that. But Volkswagen is the story that I'm really keeping my eye on. And that looks like it's down by around a percentage point at the get-go of trade this morning.
Autos and auto parts is certainly the worst performing sector. That's not to say that there's a great deal of movement to the downside, but that is the worst performing sector in the very early session.
They're all down. BMW's down, Ferrari's down, Stellantis is down. So maybe it's not just a Volkswagen story.
Right, yes, and maybe there's something bigger there. Maybe there's something about needing to spend cash on technology to shore up EV efforts. Maybe there's something that worries the sector and worries investors in the sector around that. But it is the only sector, in fact, in negative territory this morning. Elsewhere, we move higher. In particular, technology, there's that bounce from NVIDIA again. We got that yesterday stateside, so maybe that's coming through, helping to lift some of those semiconductor stocks here. Basic resources also up by 0.75% this morning. Retail, media, all doing basically only autos and parts is moving lower.
There's a stock that I've got my eye on, and that's Vodafone in particular. It was initially had some lower trades. It's higher now by 0.2%, but keep an eye on this one because not only did we talk about the buyback story yesterday, but in the last 24 hours, we've also gotten news that they're going to be selling or issuing about $3 billion worth of debt as well. So there's a refinancing story. They're buying the front end of their notes and then issuing out on the long end as well. So that's one of the stocks that I've got my eye on. But to your point, Anna, when you do look at the movers, it's a positive story. We're seeing commodities rally yet again, or commodity companies rally yet again for day two.
Yeah, and we've got a little bit of M&A chatter, at least, even if it didn't come to much in the immediate term. Deliveroo's up by just over 5%. Other media had been reporting that there were some takeover talks with DoorDash happening, or DoorDash interested in taking over Deliveroo. That they backed off. That didn't happen, but it gets the market thinking about whether they'll come back or whether others might be interested.
So Roo's trading higher. Jeffries is saying the Deliveroo DoorDash reports, quote, maybe only the start. So maybe this is a sector in which we are going to see further consolidation, which would seem logical. This does feel like this. It's one of those kind of classic technology evolutions. You get a lot of companies coming out. They all do roughly the same sort of thing. Then you get a consolidation
Do they just keep on putting their names together because they're going to get really long? Like justeattakeaway.com feels long enough already if we end up with...
It's a lot of things to type, isn't
Deliveroo,
it?
DoorDash. Yeah.
Yes, I have nothing to add on this, except for did you see one of the bigger movers to the upside is Schneider Electric? It's one of your favorite companies to talk about.
But that's an AI trade story.
It is.
It was really interesting. We were talking about with the capital goods analyst yesterday from Goldman Sachs. His name, I forget for a moment, talking about where the infrastructure spend is, and it's exactly in Schneider's space. We're investing in the grid, we're investing in transformers, we're investing all the stuff that it builds for the AI story, the grid story that goes with it. That is where that narrative is. And if you see a recovery in NVIDIA, you potentially see a recovery in Schneider as well. The two are connected in many ways. Copper cables.
So one of the criticisms of NVIDIA has been, is it diversified enough? If 45% of your revenue is still coming from the 4 richest big tech American companies, is it diversified enough? And is this, at the end of the day, still a momentum story, which is what we talked about pre-market open, as opposed to a actual fundamental story that's going to last years? Well, we actually asked Steve Eisman over at Neuberger Berman about this literally yesterday in Bloomberg Invest. Take a listen to what he had to say.
I mean, if you look at the chart on NVIDIA, you can barely see the correction. So, I mean, on a percentage basis, it's down something like 10%, but you have to peer really, really carefully at the chart to see that move. So I don't think it means anything. The people who own that stock know it's expensive, but they're buying into a story. And as long as the story is intact, like NVIDIA is obviously intact, the story is going to continue.
They know it's expensive, but they're buying into a story. Let's see if someone else shares that view. Ursula Marchioni, EMEA Head of Investments and Portfolio Solutions over at BlackRock, joins us this morning on set. A pleasure to have you on the program.
Good morning.
Is that the takeaway here for not just NVIDIA, but some of these big tech companies, these AI plays, that it's not necessarily the valuations that matter, but it's the story that matters?
There's definitely a structural shift that investors are looking at and buying into, overlaid with tactical elements, which is what you're referring to. So for sure, that is the picture. Taking a step back, I was listening to the conversation just now, and When I speak with clients, I would say what you're touching upon, the breadth of the rally, is absolutely key in terms of portfolio construction. So this obsession in looking at the S&P 500, cap market weighted vis-a-vis equally weighted, how is it moving? You know, March to May, we saw some breadth. Now it's back to be very concentrated. Is absolutely the North Star in portfolio terms that people are looking at. If I take a step back, I think we should cherish the fact that 2024 has given us more breadth than 2023. 2023 was in equity land, US, tech. Now, this year, it is still dominating, but it's been, we've seen Japan being added. There's a lot happening in Europe as well, and we should talk about how the election...
We're going to.
Exactly.
Oh, don't worry, we'll get there.
And so, again, I see that element around, for sure, the structural AI transformation, the dominance in the US remains a theme, but there has been a step change vis-a-vis last year. Again, Japan and Europe, I think, being two areas where I see significant more movement than last year.
But how much of that is a fiscal story as well? And I'm going to bring that to. We're talking a lot about it from a kind of bond market perspective in terms of what the fiscal spend is doing in terms of things like deficits and how you price it in. But in terms of stock story, it feels like the companies within AI, even the chip making space, are the companies that are getting government contracts. Some of these names are trading the way that defense names trade. Is that how you kind of value it and price it and find the sweet spots?
Yeah, that's a very good point, which is, it goes back to the argument around, is the structural element with all its components, including external support, dominating, or are we getting into bubble territory? From our perspective, we're still overweight tech. It's clear that there's a lot happening, but if you take a step back, earnings are delivering at fundamental level, and so again, it is not in bubble territory. And I think it's really this element around a rewiring of the economy, a mega force that is playing out, that from a portfolio construction perspective, investors have the opportunity to position towards. So again, taking a step back from the noise, that remains intact, pretty, from my perspective. And again, the numbers show it. So if I look at global flows in June up to yesterday, which is when I look at the numbers, we've seen 110 billion flowing into exchange traded products. Of that, 80 billion, north of 80 billion is in equities. And within equities, 56.5 is US, dominated by tech.
And thinking about these dominant mega forces and themes that guide the market, Ursula, clearly AI is on a lot of people's lists when it comes to that. How do we work European politics into this? Because there does seem to be, we'll wait to see what happens in the French election, but post the European election, there's a lot of thinking about where policies around green in Europe go, where defence policies go, things that we thought we've understood for a year or two, maybe being challenged. How do you work that into all of the other mega forces you're talking about?
I think it's a brilliant question. And we saw how the RIA has impacted the US side of the equation. So looking at Europe, taking a step back, we've seen a slowdown in sustainable flows across mutual funds, ETFs, over the last, I would say, 12 months. They've started to pick up again in the last quarter. So there's something happening there. Going back to your question around elections and how is it going to impact the overall picture. So a couple of things there. I've been watching this with great interest. First of all, from an overall perspective, I believe that US, Japan, from a growth story, from an earnings story, remain more attractive than Europe. Yet, I acknowledge that there's a lot of interest from clients. Again, number-wise, this year we've seen 11.5 billion flowing into European ETPs globally. Last year, throughout the entire year, we saw 7.5. So we've already surpassed the full year from 2023. Within that, what I would offer in terms of elections is the fact that I haven't seen investors moving crazily. So if you look at the last 3 weeks, last week and the prior two, these flows have remained consistent, particularly from non-European investors. So the US has started to buy Europe and is not moving around or appearing to worry too much. With respect to the elections. There's not a lot of movements in terms of positioning of countries, so France versus Germany, nothing unusual. So for me, this tells that European investors and international investors are really worried, are watching the CAC 40, are watching the spread between Bund and OAT, for sure. But in terms of where they vote with their money, they haven't quite made the plunge, and they still focus on the underlying. Macro is improving.
Why would they put money to work in Europe? If you want to outperform, if you want your portfolio to outperform, you have to have US tech in it. You have to have a big overweight, potentially, in US tech if you want to outperform the market. Cash is still kicking out 5%. You've still got a chunk of money in that. Do you come out of that? Maybe not. The front end still looks relatively attractive, given what is happening with the cut story. Why would I put money into a diversified portfolio right now when it is underperforming so significantly and yet continues to do so, even with the risks that I see around me at the moment? Why am I coming out of that?
You are poking me, but yeah, I see what you're doing. Well, I think if you look at what has happened to Indivior in the last 4 sessions, you get a sense in terms of there is a level of volatility that permeates through a very concentrated portfolio that you need to think about when you are there as a large private bank or a large CIO of a pension fund to deliver to your end clients. Ultra high net worth individuals or scheme members. That volatility that comes from a one-horse trade is something that you should worry about, which is why I go back to the fact that 2024 is a more dynamic environment than last year. Japan has come back. We're seeing signs in Europe despite the fact that it's early. So from an opportunity perspective, we are overweight tech, and we are overweight the US because of tech, no doubt. But I think that we should welcome these additional diversification that overall brings the level of the risk-adjusted portfolio down. If you're here to maximize returns, I'm with you. But if you're here to deliver to your end clients for the long term in terms of risk-adjusted returns, diversification continues to be excellent.
OK, had to have a go.
Fair enough.
See what you had to say. Ursula, thank you very much indeed. Ursula Marconi, EMEA Head of Investments and Portfolio Solutions at BlackRock. Thank you very much indeed. Let's take a look at the core 6. Kriti was mentioning what's happening with Schneider, so let's take a look and see what's happening there. It is up by over 1% this morning. The AI trade front and centre. The auto sector, as Anna was pointing out a little bit earlier on, though, is where the weakness is to be found. Ferrari, maybe appropriately coloured red this morning, down a little bit, but not by much. But we see LVMH gaining on the other side of the luxury story. Let's figure out exactly what is happening with the single stock stories that we haven't talked about thus far. Here's Joe Easton.
So we'll start with the food delivery stocks, Guy. We are seeing a gain in delivery this morning, only around 3.5%. This report from Reuters last night saying that the US company DoorDash did look at a takeover, but actually backed away because of valuation concerns. But potentially we might see this continue, according to analysts at Jefferies. They think the story isn't over for now, but only a small gain, really, and not much reaction in the likes of Just Eat and Delivery Hero at the moment. We'll flip over, though, and look at some of those other delivery stocks, of course, in the postal space. Getting a bit of a boost, that 14% gain for FedEx yesterday. Some of that potentially was due to their own cost-cutting, their own stock-specific factors, but also a bit of a rebound in broader earnings and also a rebound in some of the freight earnings, and also looking to review that unit as well, interestingly. The biggest gainer there, Deutsche Post, 2.5% on that one. Then the deal space, loads going on here. Too much to choose from, really, in the deals, but we've narrowed it down to 4. We have got a bit of a decline in Volkswagen, following news of a $5 billion investment in Rivian, the electric vehicle maker that we discussed earlier on the show. That is an interesting deal there. And then Sanofi, now the consumer business is in focus. They're looking to potentially sell that. We knew that already, but private equity interest is mounting for that one. Atos was the breaking news that we had earlier, that deal collapsing over a potential restructuring. But Daniel Krasinski, the billionaire over in the Czech Republic, still potentially interested. EPIE is the company, and they are looking at that company once again, so keep an eye on that one. Zealand Pharma, we've discussed, this is the obesity drug maker, selling a load of stock today, around $900 million, in order to finance their progress in the obesity drug space and compete with Novo Nordisk. So we're seeing a bit of a decline on that one. There's a couple of earnings to bring you, not too many though. There are a few. One over in, this is Amsterdam, over in Alphen. Now we've got an unchanged on the screen. I'm expecting that one to be a big decliner. They've issued a bit of a profit warning. It's energy infrastructure, that one. Keep an eye on that one opening in Amsterdam. AO World in the UK, this is your TVs and your dishwashers. That one getting a bit of a boost on the outlook. And as is ANA, the operator of Madrid Airport, getting a bit of a gain today. Finally, a couple of morning calls. Prudential, you remember a $2 billion buyback that they did last week, and that one gets an upgrade today. Analysts over at Exane BNP Paribas like that one, and we're up 0.7%. But the biggest gainer on the entire Stock 600 today is a company called Future PLC. This is the publishing firm and owner of the Go Compare price comparison website. Look at that 10% move on an analyst rating upgrade. Jefferies lifting that stock 10%. Recommend you buy Future PLC, and that is the best performer we've got today, up 11% almost for Future in London.
Joe, thanks very much. Joe Easton from our equities team with a look at some of those stocks moving, and there are a few of those stories that are keeping us busy this morning. Coming up, we will get back to the banking sector. The Barclays CEO, says it would be unrealistic for the finance industry to abandon fossil fuel clients. We'll bring you more on that push and pull between the forces guiding the extent to which the banking sector wants to fund expansion of fossil fuels and transition energy. More on that shortly. This is Bloomberg.
We are very much moving away from coal to oil, oil to gas, gas to clean energy.
Okay.
And the reality is that for quite some time, fossil fuels will be with us, right? Especially natural gas. So that glide path is long. And the world economy cannot go cold turkey on this tomorrow. That was the commitment we made. And we made a statement of how aggressively we were going to do it. And we've laid out these targets, we've laid out our measures, people can judge us by it, and we will report.
Okay, and then what's been the response then? Because you mentioned you're subject to the push and pull, and I imagine that's the case. So some of your critics will want you to go cold turkey on all of these parts of the energy mix, and others will say, no, you're leaving money on the table. So what's the response?
So I'll tell you the push and pull first. So in roughly the same 2 to 3 week period, in January, February, the state of Texas banned us from doing municipal bond business because we were too green. State of Oklahoma followed. I'm watching what Mike said about Florida and their fair access laws fairly closely. We have a retail business in the United States as well, credit card business. In addition to our investment banking and trading business. So it affects us. So in January, we get that. And then in February, about 2 or 3 weeks later, we get a consortium of UK universities, 1 or 2 of whom have been clients of ours for 250 years, saying that they didn't want to do business with us because we were not green enough. Okay? So you have that push and the pull across the Atlantic. More interestingly, a major financial newspaper based in New York, which is global, covers Texas, but not what happens to us here. And a major financial newspaper based not that far from here covers what happens to us in the UK, but not in Texas. Right? So not only are there multiple actions, different actions in different jurisdictions, but also it feels like we are playing to audiences and a world community which does not compare and contrast.
The Barclays Chief Executive, C.S. Venkatakrishnan, or Venkat, speaking to the Bloomberg Sustainable Finance Forum, talking about their different experience in Texas and in the UK, and they're using that to illustrate the push and the pull when it comes to how much business they should do with fossil fuels. I reassured him that we at Bloomberg were covering what he was doing wherever it was happening, whether it was Texas or in the UK. But it is interesting, this push and pull. He did go on to say that shareholders are very happy with what they're doing. So they might get political noise on both sides of the Atlantic from their policies. Too green, not green enough.
Are they happy?
That was the message he was giving.
Let's go back to the oil sector and look at how you value Exxon versus how you value Shell.
Yes.
Are investors happy?
No, I'm saying investors in Barclays.
Oh, investors
were happy.
in Barclays.
Yes,
okay.
exactly. But he was sharing your view, saying, we're undervaluing stocks in London more broadly. But he put that down to the sort of risk-taking culture and the way, and to do with guilt buying by pensions and all of that sort of thing. He was linking it to the bigger picture rather than the specifics around the energy space. But yeah, I didn't get into that with him. But he was definitely saying that the Barclays shareholders were happy.
I picked up on the Texas thing, naturally, simply because, not only because it's my home state, but also because so many of the Wall Street banks have really struggled in terms of things like muni bond issuance and green issuance when it comes to Texas. BlackRock, Vanguard have literally taken two completely different approaches and being punished and rewarded separately because of the fund flow story in terms of what kind of agenda they're exposing their own businesses to. And that has been met with mixed reception, to your point. And I think it's interesting that he brings it back to the idea of what do shareholders want? Because one of the very quickly, when the criticism of Vanguard was that even though they are open to both sides of the policy agenda, and it's helping them from a shareholder perspective in terms of fund flows, they are open to both sides of the policy agenda. So that comes with pros and cons.
Right, and they have to plot their course through these pushes and these pulls. Another sector that's caught in this to some degree, the auto space. Let's talk about that now. VW shares have fallen in early trade, while Rivian has surged after hours after Volkswagen announced plans to invest $5 billion in a joint venture with the EV maker. Let's get more from our German autos reporter, Monica Rehn. She joins us now from Berlin. Monica, very nice to have you on the programme. So from Rivian, the share price after hours movement tells a lot of the story. They're just really relieved they get some cash. What is it that VW gets here? We get that they get some technology, but what is it that's of interest to VW?
Sure, I think that's an excellent point. Rivian is getting a really big cash injection here. The benefits there are clear. I think the benefits for Volkswagen are maybe a little bit murkier, and I think it's important to talk about those benefits. Volkswagen has really struggled to get its next generation software push up and running. Its CARIAD software unit internally has really struggled with its engineers to push that endeavor forward. And this investment into Rivian, it gives them access through a JV to Rivian's next generation software for the next group of electric vehicles that are due to come to the market. And that was really necessary for Volkswagen. CEO Oliver Blume has taken a more pragmatic approach when it comes to technology and partnerships. He's much more open than his predecessor to going forward with third parties and partnerships to leverage expertise in the space the spaces that Volkswagen does not have expertise in, and software is clearly one of them. So he's made it no secret that he feels that Rivian is an excellent partner when it comes to pushing forward for the next generation of software. He did say, however, that the next line of products probably won't come out from this JV until the end of the decade, which does jibe with what their plans were with CARIAD.
Monica, it feels like this is a software deal, not a hardware deal. It's not a car deal. It's a technology deal. But there is one element of Volkswagen which raises questions, and that's the Scout brand, which they've started to talk about. Now, if you're a fan of kind of boxy trucks, this is a win-win, because, to be honest, the Scout and the Rivian vehicles look pretty similar. So what happens to Scout in this deal?
That's a really excellent question, and I think that's what's on everybody's mind these days. Basically, we know that there's significant overlap between what Scout is going to offer the market and what Rivian is going to offer the market. There's overlap in terms of the model lineup. There's overlap in terms of the brand values. Volkswagen's official line on this is that there is no change to their Scout plans. They're moving full steam ahead on that, and that really what they're benefiting from with Rivian is really just the software, and that their plans will continue as planned. Volkswagen has already broken ground on the Scout plant in the United States, and we know that there is some talk and some contemplation about whether Audi could use that plant for its own electric vehicles in the future, because Audi is still trying to figure out how it can push into the U.S. market as well. So the Scout plant really does have a significant role to play for Volkswagen. Sort of how that shapes up in the coming months and years is I think, an open question.
Yeah. All right, Monica Rehn, our German autos reporter in Berlin, we thank you so much for bringing us that crucial context. Coming up on the program, the ECB's Olli Rehn says expectations of 2 more cuts this year are reasonable, but he won't pre-commit to a rate path. That discussion next. This is Bloomberg.
we're still not yet at the point where it's appropriate to lower the policy rate. I remain willing to raise the target range for the federal funds rate at a future meeting should progress on inflation stall or even reverse. Given the risks and uncertainties regarding my economic outlook, I will remain cautious in my approach to considering future changes in the stance of policy.
In case we see the disinflationary process continuing and moving towards our symmetric 2% target over the medium term, then it is reasonable to assume that we stay with this direction and continue rate cuts. Having said that, I don't take any stand on when and how much. We are not pre-committing ourselves to any particular rate path.
Bowman versus Rehn, the ECB versus the Federal Reserve. How wide will the spread get? Olli Rehn's talking about another couple of cuts, potentially. That would mean 3 cuts this year. Is the Fed really going to deliver anything like that? Unlikely. Potentially 1. Maybe not even 1, though bets are all over the place at the moment. Take a look at what's happening with the SOFR future story right now. There's a great one on the terminal talking about how the market is pricing in significant cuts by the end of the first quarter. So the market doesn't really know. To be honest, lots of the central banks do either. Zoe Schneeweiss joins us now. She covers Western European economies for us. Olli Rehn thinks there's the potential for a couple more cuts. How consensus is that right now? And how hard would 2 more be to deliver here?
So Olli Rehn, who spoke to us in Finland yesterday, did highlight that there could be that market expectations of 2 more cuts this year sound reasonable. That he at the same time he did say, as you heard, that he is not pre-committing. If you Olli Rehn actually has said a lot more here than a lot of his other colleagues on the Governing Council. Most of them have been quite hesitant to give any clear direction. Have said that the main thing is here that you can't pre-commit. But here, this is a dovish push here from Rehn to go out as far. And he said even more, he said that in 2025, there could be another 3 or even 4 rate cuts. So that does give us quite a dovish slant here from Rehn.
Yeah, so that's really interesting, isn't it, in the context of some of the more hawkish commentary we get from the Fed and some of the higher inflation prints we get from various geographies around the world. Back to the Rehn interview then. How about the comments? What did you make of the comments around every meeting being live? Because there is sometimes this assumption that you have to wait for a meeting where we're going to get a new forecast for the ECB. Maybe those are more live than other meetings.
Yes, as a reminder, we get 4, we have 8 meetings a year, and at 4 of those we get forecasts. We just had one in June now, and the next ones where we get forecasts would be September and December. Rehn makes the point, and I found made the point quite convincingly, that they have economic projections, that they have underlying data for every single meeting. So why have these meetings if they couldn't act on them? That isn't, as you mentioned, the consensus view. A lot of people have said that no, you just are in a better position, that of course you have numbers, but you're just in a better position and have a more complete picture. But it does mean that the in-between meetings do get a bit more exciting. That said, anything happening at the July meeting would be a huge surprise.
So that's the monetary side of it. Let's talk about the fiscal side, specifically in the context of France. Did he just give the all clear? What's his take?
Yes, that's quite an exciting one, isn't it? In a way, it backs up our reporting. We'd heard from sources that the Governing Council was not thinking about doing anything drastic here. As we know, they have that anti-fragmentation tool, the TPI, in their back pocket in cases like this. What makes Rehn particularly interesting here is Rehn, before he was a central banker, was a EU commissioner. In fact, he was the EU commissioner for economics during the Greek debt crisis. So he, of anyone, saying we are not in a situation where we have a second debt crisis, that's an exciting thing. And he just has more weight maybe on this than some of his other Governing Council members.
I remember in my youth attending those meetings, staying up really late at night and doorstepping Olli Rehn as he came out of the late night press briefings. Distant memories, but I'm sure he remembers them too. It was fun times. Zoe, why would he go dovish at this point? Why would he push this dovish narrative? What's the objective here for him, do you think? And where does that fit into what he said before?
I think Rehn, who typically is quite mainstream, if you look at Hawks and Doves graphic, that's one where our colleagues at Bloomberg Economics have examined how much are you on the hawker side, how much on the dover side. Rehn is bang in the middle. And he regularly doesn't speak all that much. So for him, this is an opportunity here to set the tone. As a reminder, the ECB has its big powwow. It's equivalent to Jackson Hole. Its Sintra meeting is next week in Portugal. So here, going out ahead of that and saying, this is what I think can happen, I think just does remind people that you don't, we know the hawks and the extreme hawks and the extreme doves talk a lot. The centrists maybe do so less. And I think Rehn just setting the tone here is quite a good picture and gives an idea that maybe overall, all that hawkish noise we hear about, we just can't know what happens less. And if as a reminder, Austria's Holzmann even voted against the cut this month. It just shows that the hawks maybe aren't in charge right now.
All right, Zoe Schneeweiss giving us the full gambit on Olli Rehn. We thank you so much joining us from Frankfurt this morning with that crucial context. I want to stick with the broader, of course, European story, but take it from a different lens, a competitive regulatory lens, perhaps. Microsoft risking a hefty EU fine after regulators have accused the company of abusing its market power. They're now unhappy that the bundling of the Teams video conferencing app with Microsoft's other business software, that seems to be where the tension really lies. But look, it's following the story with Apple. It's following the story around exchanges. There's a lot to digest here. Bloomberg's Samuel Stolten joins us from Brussels. He is all over it. Samuel, walk us through this antitrust scrutiny that we've been seeing.
From Brussels, and two different developments this week from the European Commission's competition regulators against, as you just said, both Apple and Microsoft. Now, on Monday, Apple received a formal warning under the European Union's newly minted Digital Markets Act, effectively telling the company to change the terms and conditions for developers on its App Store to make it easier for them to link out of the App Store to offer purchases for users away from the Apple ecosystem. And let's remember that Apple charges up to 30% commission on those App Store sales. And then on Tuesday, Microsoft also got a formal warning from the European Commission, but this time it was under traditional antitrust law. And the European Commission said that it fears the company could be abusing its dominance by bundling its video conferencing software Teams along with Microsoft's Business Suite software. Now, it's important to say that both actions are at a fairly early stage, but indeed they both do show that the European Commission's regulators has big tech firmly in its sights this year.
Sam, good morning. How significant could these moves be? And I suppose when we ask how significant, we're talking, how big a fine might they get? How big might the money be?
Yes, well, it's guesswork at the moment, really. But for the companies, the ramifications really are all about those fines. Apple, as you may recall, was fined nearly $2 billion just a matter of months ago for similar allegations when it comes to so-called anti-steering restrictions on the App Store. Under the EU's DMA, it could also come in for future fines of up to 10% of global annual revenue. But also, just as importantly, it could be hit by firm legal orders to stop some of that abusive behavior. Microsoft, similarly, could come in for fines of up to 10% of global annual revenue under traditional antitrust law. This is really the first time, actually, Microsoft has been in the EU's antitrust sights for almost a decade. It was last fined by the EU in 2013 for abuses of dominance. But two companies, both firmly in the European Commission's crosshairs, could, over the coming months, come in for those potentially billion-dollar fines.
Sam, the response from Apple, from other big tech companies in response to some of these fines and some of this kind of really strict regulation that you're starting to see really emerge and be taken more seriously given the fines that you were just talking about. One of the criticisms of that is that it stymies innovation. In the last couple of weeks, for example, Apple saying that they're not going to bring the same developments to their EU platforms as they would in the States and delay those rollouts. There's also been talk from the likes of CEOs of Ericsson, of Booking.com, that the EU kind of regulatory agenda is perhaps too strict. Walk us through that reasoning. Is that valid in the face of trying to innovate in Europe that you're hearing from a lot of these politicians?
Yeah, so it's a really interesting argument. So, as you just said, on Friday evening here in Brussels, Apple announced that they would hold back certain technologies from the EU market due to uncertainties around compliance with the DMA. And one technology that it said it wouldn't roll out here in Europe for the time being was, of course, the much lauded Apple Intelligence. At the moment, I think it's quite a strategy from these organizations. I mean, they're not too sure about what the European Commission expects from it in terms of DMA compliance. Really, what we're looking to hear a bit more from is the consumer perspective. Is the DMA something that consumers really care about? Do they really, really care about the European Commission trying to stamp out some of these abusive behaviors? Or would they prefer access to some of these key technologies that, yes, of course, the companies may not be 100% certain comply with EU law, but the consumers have some sort of a thrust to use these technologies anyway? I think that's the key question, and whether or not how much the European Union could fall behind other jurisdictions in terms of innovating technologies for the future.
Yeah. I mean, it's fascinating. It feels like the market has for so long really brushed off this risk because of the fines seen as kind of child's play for a lot of these big tech companies. But on the other hand, when you're pulling back on the revenue-making abilities in Europe, it's a fascinating story. That's where investors have to price that in. Bloomberg's Sam Stolten, I could talk about this for ages with you. We thank you so much for bringing us that crucial context. We're going to stick with that kind of clash that we're hearing, except this time going back to the French story. France's main political parties clash in their first televised debate ahead of legislative elections, and another debate later this week. More on that next. This is Bloomberg.
It's a clear message I hear each time I meet people. Purchasing power is about French dignity. What remains at the end of the month, once we have paid all our bills, but there is still stuff to pay for.
Why have we returned to the question of retirement reform implemented by Emmanuel Macron, which was widely criticized in the country? It's a reform that is socially unfair and it is economically inefficient.
This photo represents a France that we no longer want. A France where elderly people are forced to return to work in order to live with dignity after having worked already their entire lives.
France's three biggest parties there clashing. First televised debate took place last night. This ahead of the snap legislative elections that are going to be taking place first round into this weekend. Amazing how young they all are. Compare and contrast that debate with the debate we're about to have in the United States, just from an age point of view. Kind of tells you something.
Brutal.
Maybe about what's happening. What do the markets want out of this? Well, let's try and find out. Bloomberg Opinions' Lionel Laurent has been writing about this. A lot came out of last night, but in some ways it was just kind of confirmation of what we already knew. I found it fascinating that Bardella was kind of making it clear, as you said, as you sat down, that he doesn't want to break anything here. He doesn't want to break any furniture. He wants basically to kind of manage this process towards 2027 when they hope that they can win the presidential election. From a market's point of view, looking into this election, how do I sequence the various outcomes? If the left does well, I'm assuming that's the worst case scenario. What's the next worst case scenario and the next worst case scenario or better case scenarios after that?
So I think it's difficult for markets because there are many unknown quantities here. The far right, I mean, Bardella is 28 years old. He's never really held a big, serious position. This is all very new. He's saying the right things. He's saying, I want to work with Macron, with the institutions. I do not want to break the budget, so that's all reassuring. But the fact is that I think markets would prefer almost a hung parliament because not much can come out of that. I think they might be surprised to see that Bardella does better than we think and might get an absolute majority, which might be a bit bumpier in the short term.
Lionel, take us through what the first round means for the second, because let's just assume we get something like the polls suggest for the first round. How would the supporters of those three main groupings fall into line in a second round? Because that seems to be a bit of a missing piece of the jigsaw at the moment.
It's very tricky, but the system is 2 rounds, and it was designed to keep out the extremes, i.e. people who come third. The weird thing today is that Macron is coming third, and the extremes are in first and second place. Now, I've been speaking to people who have experience really on the ground in French politics, and they say something has changed in the French electorate, where instead of trying to keep out the far right, they might actually try and keep out Macron or try and keep out the left. But bottom line is, Macron could end up being the big loser of this 2-round system, and Bardella could actually win better because people are so angry and seem to want change so badly, they're willing to penalise the second or third choice.
And at the same time, in that debate, by the way, Bardella was very clear about, in terms of reassuring the folks who are worried about the deficit, saying that that might include cutting financing to the EU as well. At the same time, we have the German government as well pushing back on EU bonds. And just to add on to one more player, we're getting comments from Italy's Giorgia Meloni speaking in Parliament, said the EU bonds could be used to finance defense. So the seals is clearly a hot button topic. Your take on all of it?
So in the terms of European leadership, I think there is a vacuum if we lose essentially Macron's government. So I think Germany is trying to fill that and get out in front and get what it wants. Meloni is an interesting example because she is the rising star on the right in Europe. And I think that actually we might find, given that she's open to defence when it comes to fiscal integration, defence is the crowd pleaser for the right. I think France could go that way. I think if there's one thing that Le Pen and Meloni and others have in common, it's that defence is a consensual crowd pleaser. So that might be the angle that they take to keep that debate going.
Is Meloni the right framework to think about France? Do I think about the way that she has not upset the apple cart in Italy as the right way to think about France right now?
That is what I think that Bardella wants people to think about and say, OK, this looks like Meloni, I can recognise that. Yep. I would say it doesn't quite work. Le Pen has a more left-wing pillar to please the workers, the working classes. She has a bit of a less kind of simple culture war attitude, and she's definitely less orthodox when it comes to the budget. So it's an open question, but I'm not sure there is much of a Meloni factor here. It's a bit more unknown.
Lena, what do we know that's up to date about the National Rally's view on various European institutions? We're not talking about Brexit anymore, as we might have been doing, 5 or 6 years ago. But what do we know about how much they want to play along and with these? I'm thinking, in particular, what stood out to me just yesterday, we had the finance spokesperson for the National Rally saying that the Liz Truss situation won't happen in France because the ECB will be there as the backstop, and I thought this was very complimentary to the ECB from the National Rally. I mean, what do we know about their stance there?
You are right that Brexit has helped everybody see what not to do. Fine. He's right that that kind of short-term market implosion might not happen, but there is a Liz Truss risk, and that is to do with selling unrealistic budgetary unicorns. What the Brits call the moron risk premium. I don't know what you would say in French.
What is that in French?
I don't know. But, well, we obviously have no morons in France. But the point really is that these are unknown quantities. Now, the reassuring thing is that, again, the presidential election is a few years away. Everybody has their eyes on that. Nobody wants to scare the market. So I would tend to agree with the idea that they will say anything to get elected and keep saying anything to stay in power.
All right, Bloomberg Opinions, Lionel Laurent. We thank you so much for bringing us that context. Keep an eye on his columns every single day. He's got a fresh take, and that, of course, ahead of the French debate tomorrow night. I want to say as well. It's not the only one, though. We've got the U.S., we've got the UK. There's plenty of things to debate on the debate stage.
Yeah, when's the US one? Because
tomorrow night.
Right, and the UK is tonight. So
apologies.
Days of debating.
So hold on. UK is tonight. Then France. Then the US. Early in the morning.
They've got another one in France, I think, before the second round.
They carry on.
The UK one tonight, I think it's going to be interesting, to your point earlier, seeing these two go head-to-head. How much are we really going to learn? I don't know whether it's going to take us further forward. I thought the growth story that's come out this morning, we talked about this earlier as well, from this ITV debate, talking about 2.5%, I think is amazing. If Starmer wants to fund what he wants to fund and do what he wants to do, he has to grow the economy. If the maths is going to work, he has to grow the economy. How he does that, I think, still remains an unknown.
Yes, and this was one of the comments that our colleague Phil Aldrich was making earlier on this week when we hosted this business debate here at Bloomberg. He was saying, if they want this, if they want that growth to fund the deficit. They need it really quickly. Not just they need a lot of it, but they need it in a hurry. And you can't, we can do a lot with planning, but you can't build all those houses and get it delivering for the UK economy in a year. So this is going to be a tricky jigsaw to put together.
Yeah, I'm curious about your take on this as well, though, because you were just in the moderator's seat. To your point about the business debate, I'm curious what's top of mind for you of the many issues that are going to be discussed. Which one would you ask?
Well, we'll hear what they have to say about growth. I think Guy's point's really good. How quickly can you get that growth? And the market will take a view on whether they think the answer to that question is credible or not, and that'll be crucial. Let's get into that conversation now, shall we? Joining us for more, Bloomberg's Caroline Hepker, hot-footing it from radio over here to TV to give us thoughts ahead of the debate. Caroline, so I'm wondering about the growth story. I'm not sure does that get a look in at a national TV debate? I'm not sure. What's going to be a focus for you? What are we looking at?
Yeah, I mean, it may be that the gambling story, it may be that social issues dominate, but I think that the interview that Keir Starmer has given to ITV, we got a clip of it today, and the full interview goes out tomorrow, of 2.5% of economic growth. Him talking about under a Labour government it being similar to the Blair era, I think is quite extraordinary, because the Labour Party has been so cautious. The manifesto had very, very little in it. And then to basically say we can reach 2.5% growth, which is extraordinary, right? The prediction for economic growth in the UK is 0.8%. If you look at the OBR, if you look at Bloomberg Economics' forecast for 2024, if you look at 2026, the Bank of England, often considered quite rosy, 1.25%. So how does he even get there?
So, precisely. What do you do? One of the questions will be Europe, which I think is one of the most obvious answers to this question, is you make life easier with Europe. But he doesn't seem at this point ready to commit to that as a potential route to achieving this. So what's left? You can't, to Anna's point, that's a lot of houses.
In a hurry.
It is. So I think, firstly, it has to be said that Keir Starmer was put on the spot in this interview. So I think he talked about 2.5% as something that took place in the Tony Blair era that he would want to emulate, but I don't think that this is a pledge. It's not part of the manifesto. No. This is not a hard commitment. So I think it's just interesting that he has really kind of put this target out there. The other issue is that already to make the goals that we have, Bloomberg Economics thinks £20 billion is going to be needed in terms of revenue raises just to get there. In the first couple of weeks of the next administration, there is going to be a European meeting. So this is the European Community meeting that is happening 2 weeks after the vote. So there will be an opportunity to try to reset the UK's relationship with the EU. But as you say, we're not going back into the single market. So how do you deliver it from that?
I'm curious to see if this is, at the end of the day, a tradable event. This is the conversation with all the debates with France, with the US, and then the UK. Do you actually trade off of this? Bloomberg's Caroline Hepker, we have to leave it there. But that's something we're going to be monitoring going into tonight. Some headlines crossing the Bloomberg terminal in the meantime around Basel III. Switzerland saying they see no reason to deviate from the timetable, and they will enter into force in Switzerland on January 1st. This is important given that the states are pulling back on some of those capital buffer requirements. There was discussion about whether or not on the European continent that would actually hurt some of these banks. You did see some of the banks, including UBS, for example, trade on that dilemma. It looks like Switzerland saying all is staying normal.
So we're going to watch the debate tonight. It's probably going to be more exciting than the football was last night, so that's a good thing. But there's plenty of football happening tonight as well.
Yeah, there might be some exciting football elsewhere. The market's then modestly positive this morning. The stock 600 up 0.5%. Looking at the sectors that are on the move, most of them are in positive territory. Technology leads the way. Once again, the Nvidia tail wagging the dog. The autos and parts sector is the only sector, once again, in negative
Feels
territory.
like Nvidia's the dog right now. Anyway, maybe not a dog from a market point of view. Up next, it is the Pulse. Tom McKenzie is going to be taking you through the next hour. We continue with the fantastic lineup. Politics front and centre. Let's see how Nvidia trades again today. This is Bloomberg.